We basically focus on a couple of areas. We do office repositionings and we do some residential redevelopments. We're doing a little bit of lending. I think all of that sort of comes together in an interesting way in that, to the point about the office market, for several years I think that ultra well located, super stable, as you guys have heard me say it before, the Goldilocks principle assets are continuing to trade at very expensive levels. The things which sort of don't initially strike people as interesting are now becoming interesting. So sort of A offices and B locations that are well let. And part of that's driven just by the fact that investors are starved for yield. So as you saw earlier on the charts, the financing spread was pretty attractive in Germany. You can still get pretty attractive rates on office. So if you can capture yield at pretty attractive levels. We don't do a lot of that. We do some of that. That's more for Alex's domain. On sort of repositioning strategies, we do like Berlin. We started going into Berlin aggressively about 2 years ago, actually. And so we've been riding a bit of that upward trend on pricing, and we're seeing it. And to the point about rents, I mean, it is true in a lot of sub-markets and districts. Rents have increased dramatically, and Berlin has had a pretty steady rental growth increase over the last 10 years, really. And in the last 3, it's gotten, you've had, in some cases more than 5 to 6% rental growth in a lot of areas. So we sort of look across a number of different areas, but I think I would echo a lot of the comments that have been made.
And in terms of Berlin, that's mainly residential you've been looking at, or also?
Yeah, well, we have owned, stabilized, sold offices in Berlin as well. More in that sort of B submarket area, but A quality buildings, and we were buying things that were left over from the overhang of the sort of the bubble period of going back to 2002. I mean, these bubbles, sort of these growth periods take a long time to work off. So I imagine we'll be buying stuff from the 2006, 2000 era in 5 or 6 years.
Right.
But we're selling to yield buyers, so groups that are wanting to capture that spread. Because right now, as you saw, you can finance in Germany. All it takes is one bank to have a competition. I mean, we do that all the time. If you have 2 banks, it's wonderful because you get quite a lot of competition. So you can actually finance reasonably well-let product. The weighted average lease life is a factor, but that's just a function of the German market. But if you can sell at say a 7 and you can finance that for below at 3, then you've got massive interest rate spread that you haven't seen. You haven't seen it for. Well, I mean, I came in 2003 to Germany, and we didn't see it then. We saw maybe 300 basis points at certain points in time there. But I mean, this is the biggest spread that we've seen, and this is sort of a little bit like Japan was back in sort of the 2002 to 2003 era. So it's pretty interesting if you had capital that was looking for very stable yields on a leveraged basis.